Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in and the White House announces new actions in regards to home ownership. So we're going to take a look at exactly what the White House is saying that they're going to do moving forward to help with the unaffordability crisis and lack of inventory crisis in America. So we'll explore that, guys, and we'll see whether or not they fell short or are they actually trying to do things that will realistically help to bring back a more balanced housing market. And hopefully we won't be stuck with another failed school loan forgiveness situation. But either way, guys, do me a favor, like this video, subscribe if you haven't already, shoot me a comment below. But either way, I hope you guys enjoy this video and get overwhelming value. And as always, everything will be linked to my description if you want to come back to access this information. One of the links I'm going to include in the description is the USDA eligibility map. Basically, if you want to see if a property qualifies for a USDA loan, you can go to this link, plug in the property address, and see if it qualifies. But regardless, the name of the White House announcement that was released a few days ago is titled, White House Announces New Actions of Home Ownership. So we'll go over this in detail. For millions of Americans, home ownership is the foundation for so many parts of their lives. And for many, it is their primary source of wealth. I highlighted that because think about that for a second. If that's their primary source of wealth, understand that house equity is not liquid. It's trapped in the house. So this, to me, that first sentence right there, you guys, this is a reminder that most Americans, the more than the majority of Americans, are living paycheck to paycheck. And if someone's living paycheck to paycheck, in my opinion, that's not really a strong consumer. Even if they have $100,000 or $200,000 in equity in their house, that's still not a strong consumer. This goes on. The Biden-Harris administration is committed to expanding access to home ownership, ensuring homeowners can afford to stay in their homes and make the repairs they need, and that the wealth-building potential of home ownership works equally for everyone. When I read that first paragraph, I'm like, right now the housing market is 100% not equal when only roughly about 20% of Americans can even afford to qualify for a loan. The housing market's not equal, you guys. And that's one of the reasons why I'm always preaching to you guys on this channel about empowerment, about educating yourself. One of the biggest enemies to the real estate market is an educated, empowered consumer. And if you want an equal playing field in real estate, it's going to take a lot more than price drops. It's going to take you learning how real estate works. And the most important thing is, to be honest with you, is you need to worry about yourself when it comes to real estate. Second paragraph. Today, the Biden-Harris administration is releasing new data showing major federal investment in home ownership, just like institutional investment in home ownership, but whatever, and announcing key new actions to accelerate progress. These actions make important strides, but given the lack of homes on the market and current interest rates, to truly ensure home ownership is accessible to all households, we need Congress to act. So in other words, they ain't done nothing yet because they need Congress. Without Congress, they can't do nothing. That is why President Biden proposed $16 billion for the neighborhood homes tax credit, which would result in more than 400,000 homes built or rehabilitated, creating a pathway for more families to buy a home and start building wealth. The president also proposed a $10 billion down payment assistance program that would ensure, and this is interesting, first-time homebuyers whose parents do not own a home. So in order to qualify for this down payment assistance program, your parents can't own a home. How do they prove that? That's very interesting to me. But this goes on, can access homeownership alongside a $100 million down payment assistance pilot to expand homeownership opportunities for first generation and or low wealth first time homeowners. Let me give you some stats about down payment assistance programs. That's actually extremely troubling. When someone gets a down payment assistance program, basically you're allowing one of the most at-risk sets of home buyers to purchase a home in the most toxic housing market we've ever had. So you're taking the biggest at risk and you're trying to push them into purchasing a home in a very toxic market. And let me explain one other thing. When it comes to down payment assistance programs, those are the loans with the highest rate of foreclosure, probably because people don't have their own skin in the game. There's no down payment. So a lot of people will just look at a mortgage payment as rent and fail to understand the repercussions of losing a house, which is not like an eviction. It's way, way worse than an eviction. New data shows strong investment in homeownership. Yeah, strong investment from investors. Am I right, guys? I mean, seriously. The Treasury Department released data demonstrating how President Biden's Investing in America agenda is supporting existing homeowners and helping more Americans access affordable home ownership through over $12 billion in support. The American Rescue Plan Home Assistance Fund, HAF, has assisted nearly 400,000 homeowners at risk of foreclosure. Now, this has been going on through Q2 of 2023. So when I first read this, I'm like, how is there still COVID money? How is there still like the COVID money being pumped into our economy when we're trying to fight inflation? I mean, it's absolutely shocking to me. So I had to look up HAF. This is a homeowner assistance fund. The homeowners assistance fund, authorized by the American Rescue Plan, provides almost $10 billion to support homeowners facing financial hardship associated with COVID-19. The thing is, guys, is like everyone made more money during COVID-19 and the government was printing money for everyone. So it's 2023 now. How is there still money being poured into this? This is crazy. HFF funds were distributed to states, U.S. territories, and Indian tribes. Funds from the HAF may be used for assistance with mortgage payments, homeowners insurance, utility payments, and other specified purposes. I mean, it's starting to sound like if you go and buy a house, you're never going to lose it, right? Like we have an entitlement. If we go and somehow figure out how to buy a house, we don't even have to make payments anymore, right? And we can qualify for some of these programs and they're going to pay our utilities. Like I get it through COVID. Through COVID, this stuff was needed. I mean, they locked us down, they shut us down. But when we went back to work, this stuff wasn't needed anymore, you guys. This is crazy. This is actually adding to the problem. We need to take the ability to purchase away from people right now, not give them more ability to purchase overpriced houses. So far, I don't like what I'm reading. Couple interesting bullet points. The U.S. Department of Housing and Urban Development, or HUD, is announcing that the Federal Housing Administration, or FHA, first-time homebuyer rate under the Biden-Harris administration is the highest it has been since at least 2000. Since the start of the administration, FHA has supported nearly 1.8 million homeowners with purchase mortgages, and 83.6% or 1.5 million of whom are first-time homebuyers. So think about this for a second. The biggest people at risk have a higher stakehold in the real estate market. I wouldn't be bragging about that stat, to be honest with you, especially when Jerome Powell came out and said, if you are a first-time home buyer, you may want to sit this out and let the housing market reset. I think the USDA loans, when we compare it to other mortgages, are actually great loans. I'll show you that in a minute. The U.S. Department of Agriculture, or USDA, is announcing that in the past fiscal year, it provided more than 7,100 direct housing loans. That's actually low. I thought it would be much higher than that, which subsidizes loan rates down to 1% for certain borrowers. This is the highest number of loans since 2010, serving home buyers with an average income of $42,000. Roughly 55% of these borrowers were female-headed households, and 22% identified as Black or African American. One of the things is the property must qualify for the loan. So in other words, the loan was kind of made for like farms or rather rural property. So in order to determine if a house qualifies, just the house qualifies for a USDA loan, you actually have to go on their website and go to the property eligibility map. And this is what that looks like. This will be linked in my description. All you have to do is you type in an address right here, you hit go, and it will immediately tell you whether or not that property is located in an eligible zone. So let's talk about the new actions to support homeownership. So these are the few things that the administration is trying to do to help save the housing market, the unaffordability crisis, rather. We know that despite these milestones and actions, homeownership is still out of reach for too many, which is why the administration is committed to aggressively increasing home ownership opportunities, which includes, so number one, this is actually very interesting. They want to allow home buyers to leverage income from accessory dwelling units. Now, in Texas, we don't have a lot of that, but in like really dense places like California, maybe even New York and places like that, they have like little houses in people's backyards that they can actually rent out to help make money. It's very interesting. So today, HUD through FHA published new policy allowing prospective borrowers to use a portion of the actual or prospective rental income from an accessory dwelling unit. That's pretty astonishing. The prospective rental income is very interesting as well. To be added to the borrower's effective income for purposes of qualifying for an FHA insured mortgage. So that applies to FHA. I'm not sure about conventional. FHA's new policies will increase the ability of home buyers across the nation to obtain access to affordable mortgage credit when seeking to purchase properties with ADUs. Add ADUs to existing structures or contract new homes with ADUs. The flexibilities will help more first-time home buyers, seniors, and intergenerational families leverage ADUs to help build generational wealth through home ownership while creating new affordable housing in their communities. So that sounds great to me. I love that income rule. I think it would actually help people. I have no idea how that would help creating affordable housing in their communities. I think they're just adding that on for political reasons. I don't know. Let me know what you guys think. Let's move on to the second thing. Increased mortgage opportunities for tribes. USDA is awarding $9 million in loans to 9 Native American community development institutions as part of its efforts to increase access to home ownership for Native Americans on tribal lands through a relenting demonstration program. The program provides capital to Native community development financial institutions to be relent to low and very low income people who live on tribal lands or are in need of affordable single family homes. So they're helping tribes, and there is a lot of poverty in tribes. So, I don't know. I don't think that's a bad thing necessarily. Ensure innovative homeownership models can work. Before the end of the year, USDA will launch a pilot to test alternative eligibility criteria related to community representation for community land trust organizations through its Section 502 Direct Home Loan Program. Through this pilot, USDA will evaluate whether expanding eligibility criteria in this way increases access to affordable home ownership opportunities. And I'll tell you guys, anytime that they loosen up guidelines, generally it makes it easier to qualify. And if it's easier to qualify, it can add to additional opportunities. This one's very interesting. Make home repairs easier to finance. Very interesting. HUD, through FHA, is continuing its work to update the 203K Rehabilitation Mortgage Insurance Program to help home buyers and homeowners finance the purchase or refinance of homes in need of improvement. And actually, guys, a 203K loan is a pretty good loan, to be honest with you. If you want to purchase a primary residence that's in really, really bad shape, you can get a 203K loan and get tens of thousands of dollars through the purchase loan to be used to actually rehabilitate the property. That's very interesting. But I don't know a lot about the refinance to do that. That's very interesting to me. FHA is considering potential policy changes that could increase the funds available to borrowers to make renovations and repairs. Again, that's so interesting. Other policies under review would permit more time for completion of those improvements. These and other program changes will increase the use of FHA-insured mortgages to finance renovations that will improve existing homes and restore them to viable use, adding to the supply of housing in communities across the country. Help homeowners know their rights and remain in their homes. The Consumer Financial Protection Bureau, or CFPB, an independent agency, is working on reforms to existing rules to help homeowners when they have trouble making their mortgage payments. I mean, geez, do we need any more protection? My gosh. The reforms build on observations during the COVID-19 pandemic about places where the rules could be streamlined and simplified. The reforms will ensure homeowners can get the help they need without unnecessary delays or hurdles and are better able to not fall into foreclosure. When I read stuff like this, guys, and I think about my own foreclosure, I have mixed feelings. The firsthand, what I feel is like, I really wish that there was someone there to help me when I was going through my struggles. But then the other side of me is like, well, thank God I learned that lesson, because I couldn't have learned what I know now as far as the empathy and understanding all these things unless I went through that pain and tragedy. So, on one hand, I like the fact that people that are truly struggling, that truly need help, are getting help. I like that. But I feel like, and actually I know that there's going to be people that take advantage of it. Even if the intentions are good, it's going to be taken advantage of. It happens every single time. And this goes on, assist homeowners behind on their mortgage. In fiscal year 2024, VA will deploy a new home retention option that provides a long-term solution to address the most severely impacted veterans. That is amazing right there. So VA in 2024 is going to have some type of loan modification program. That's amazing. I think VA loans are great. And honestly, I think we should do everything we can for veterans. I want to be honest. I mean, they're fighting for our freedom. I mean, seriously. I mean, why wouldn't we take care of heroes like that? All right, guys, and we're almost done here. The announcement builds on prior work across the administration, including policy announced earlier this year that reduced the mortgage insurance fees for borrowers receiving FHA loans, saving them on average $800 per year on housing costs. And that was a great thing. They actually dropped what's called MIP, mortgage insurance premium. They dropped that, I believe, to 0.55. So, and actually, there's certain situations where FHA is a cheaper loan to get versus conventional, especially if you have challenged credit. Now, HUD has also made it easier for first-time homebuyers to qualify for FHA-insured mortgage financing by permitting lenders to use positive rental history as a factor in elevating an applicant's credit worthiness, and by providing more access to affordable single-family FHA-insured mortgage financing for credit-worthy individuals with student loan debt. Basically, what that means is it allows consumers the ability to use things like utility payments or even rent payments to add to their credit report. So you can actually add those things in a roundabout way to someone's credit report to help the automated underwriting system show their credit worthiness. So actually, I don't think that's a bad thing. To be honest with you, I think that could be a good thing. Overall, when I read this, I think it falls incredibly short. And the reason I say that, guys, is because it does not address a single thing about the real issue here in the housing market, which is institutional investment, or rather investment overall. And right now, you guys, let's not forget, we have over 15 million homes that are vacant right now, 11.5 million of which are vacant year round. Not only do we have this massive amount of vacant homes, the share of investor-owned homes in the U.S. remains high. According to the national data provider CoreLogic, the sizable U.S. home investor share of ownership seen over the past 2 years held steady going into the summer of this year in 2023. In March 2023, investors accounted for 27% of single-family home purchases. We have a horrible investment problem in our housing market. I mean, when only about 20% of Americans can even afford a house, and meanwhile, investors own something like 40 million houses, I think what they're saying falls incredibly short. I like a couple of things that they're doing for the people on the bottom, or at least what they're saying. But again, it's not really addressing the vacancy crisis or the speculation crisis. It's not addressing the institutional investors. I mean, if they don't address those things, why would things get better and not worse? You gotta hit them where it hurts. And I don't know how. Maybe you tax them, maybe you limit the amount of homes an investor can purchase. I don't know, guys. Either way, I think what their plans fall incredibly short. And if you don't mind, do me a favor and comment below. Let me know what you think. Do you think it's a great thing? It's a good start. At least they're doing something. Or do you think it's a bunch of dog and pony show and it really is not helping anyone at all? And maybe they're just saying that because they have an election that they want to try to win next year. Either way, you guys, I look forward to hearing from you. And if you're out there investing in real estate, you guys already know I wish you luck and I hope you win.